IPSA International focuses on regulatory risk mitigation, and mainly right now we help large financial institutions and corporations prevent money laundering and terrorist financing through investigative due diligence, and that means we determine the reputations of people and entities that they may be doing business with. We also have a group that focuses on your more standard corporation regulatory issues, Sarbanes-Oxley and those sorts of things. And then the parent company, of course, provides cybersecurity as well. It continues to grow, and candidly, we predicted that post 9/11 and the Bank Secrecy Act and Patriot Act U.S. regulation, there would be a spike, and then people would begin to understand, create best practices, and there'd be a bit of a leveling out. We have not seen that. And we think the reason we haven't seen that is how business continues to be more globalized. The globalization of business creates additional challenges, even related to privacy, tolerance for different cultures, and the regulatory framework for how to do business globally continues to be challenged, and anti-money laundering being one of the significant components of that. We focus on, generally speaking, large multinational banks that have a footprint in New York City, which really is the vast majority of the large ones. But they could be foreign banks that have business operations here, or U.S. banks, of course. But that tends to be our focus area, the large multinationals. Through one of our large bank clients, where we are providing due diligence on their customers, mostly people know this as know your customer due diligence, we came across some governments in the Caribbean that had a product for immigration investor. So let's say you're a Russian living in Dubai and you want a second passport, you go down to St. Kitts, Antigua, Dominica to try to get another passport. And the three pillars that you think about in an anti-money laundering program for banks relate to a risk profile, which determines how deep of an investigation is required to understand an individual or entity, and then consistent transaction monitoring to determine is that person's relationship with the bank being used to further illicit activity. Those same pillars are what's needed to help prevent risk in these Caribbean governments who are trying for economic reasons to attract high net worth individuals to their countries. So we got invited into that region, that industry, because of the lessons we learned in the banking sector. I think that's true certainly early on. Post 9/11 in the U.S., even the challenge that even doing business in the U.S. is you had the Office of the Currency of the Comptroller, you had the Federal Reserve Bank, and you had state banking organizations that were doing examinations. And in fact, one bank could have 7 different examiners in any one month doing an anti-money laundering examination. And the problem post 9/11 is that every one of those 7 could provide a different understanding of the regulation. That's mostly been fixed in the U.S., and then you expand that internationally, and you have a bank operating out of 100 countries, and they have to now understand how are they going to do business in each country. Many have taken the attitude of, well, let's just go with the highest bar. What's the highest regulatory mandate? And generally that's U.S. Challenges with privacy and other issues, say in Japan, you're not allowed to do criminal background checks in the same way you do in the U.S. So then these organizations have to determine how are they going to manage those differences. So the complexities are certainly there and there for a long time to come. There certainly is more and more reason, and I think the regulators are trying to, through their large fines that you've seen in the last number of years, motivate not only banks and any even jewelry stores, etc., to proactively prevent. Because if they're found lacking in those prevention, they come down very hard, especially if, in, for example, large banks, there's been plenty of precedent set. So if they are choosing not to prevent in the right way, the regulators are coming down very hard. Candidly, though, our business tends to be very limited on the proactive, and we tend to be called in on the reactive. I think that the penny wise, pound foolish is still unfortunately out there.